Now, demand for coal, it has dropped as the recession has crimped manufacturing both in the United States and abroad. But China buys up steel and prices rise. Coal may be making a comeback if that continues. This is even if President Obama's policy for limiting carbon emissions takes place. Now, for more on investing in coal companies, let's go to Paul Forward, energy analyst at Stifel Nicolaus. Paul Forward, welcome.
Thank you, Pim.
Now, Paul, listening to the president speak today about energy policy and then looking at what coal company stock prices did, I guess you could be forgiven for saying there was a disconnect, right?
Well, sure. I guess there's always a disconnect when the market's thinking usually pretty short term. But when we talk about regulating carbon dioxide and putting in a cap and trade system, which is what the bill that's on the table is proposing, it's a very long-term process and still a very uncertain process, considering that the House still has to vote, it's still got to go through the Senate. So we don't know what the eventual makeup of the bill will be, or what the eventual impact will be on the coal industry.
All right, so we should not rush to any kind of judgment as to the valuation of coal companies vis-a-vis what happens in Congress. Let's talk more about the economy. That has a more direct impact, at least right now. What's the state of the coal business when you look at pricing? Let's start with met coal, if we can, coal that's used to make steel.
Well, I mean, it's a small slug of the U.S. market. It's only about, say, 6% of the U.S. market, but it's a very important 6% for the profitability of the industry. A year ago, it was going for $300 a ton. This year, for the best stuff internationally, $128 a ton for the international markets in coking coal or metallurgical coal. But there's been some signs of life. You mentioned China earlier, and certainly China has been absorbing some of the available metallurgical coal on the markets as their steel production really isn't down this year to any extent, really, and the real weakness in the markets in the U.S. and Europe and some of the other more traditional industrial countries. But China is certainly absorbing some of the excess of met coal in the markets today.
All right, now that's met coal. Now tell us about what's going on with thermal coal. This is the majority of the coal business in the United States.
Right, it's about 90% of the market, and power demand is way down this year. I mean, we've got power demand in the regions that use coal down almost 5%. Coal production is coming off to match demand, but not quickly enough, and we've seen a big inventory build to the point today that inventories at power plants are at a 25-year high right now. So pricing has come down as a result, but I think we've seen some very positive steps just this quarter where the industry all decided pretty much at once at the start of April that it was time to take significant production cuts. And I think if we stay at the current rate of coal production, then we'll eventually see these stockpiles come back down toward normal levels. But that might be a 2010 event.
All right, well, you talk about production cuts. Would that lead us then to talk about Massey and what's going on there? Because that affects really your estimates. And you've got a buy recommendation on the stock right now.
Well, that's right. When you look at Massey Energy, they're really at the center of the storm of production cuts. They're the top producer in Central Appalachia, which is both affected by the metallurgical coal business as well as the utility business. But it's a high-cost region, and we tend to find the high-cost miners are the ones that have to cut production first. We think Massey's going to have a tough quarter along with the rest of the industry. I think our numbers are 34% below the street for the second quarter. But we can still recommend certain firms, firms like Massey, who I think are very well positioned to withstand this long downturn in coal, because we're seeing signs of demand picking up and pricing picking up for 2010. The market's always going to kind of look past the next couple of quarters and anticipate what happens next year. And on that basis, you look at Massey trading about 9 times our earnings estimates for next year. For the top coal miner in the region, to us, that's a buy rating.
All right, and you've got, what, a $22 price target on the shares, the stock trading at around $19.72 on the close today.
Actually, we raised our target up to 30, so
up to 30.
A little more headroom than that. Yes, we did.
All right, and is this over what kind of time period, 12 months?
That's a 12-month time period, that's right.
All right, turn your attention now. Tell me what's going on at Peabody, BTU. Do you like that as well? You've got a buy recommendation there.
Yes, well, Peabody is making the point, I think I'd agree with him, that the international markets will recover before the U.S. power markets. You've just got too much inventory here and too slow of demand growth. But their company it's the largest miner in the western U.S., but they also last year generated about half their earnings out of Australia. And they've had some announcements recently about joint ventures in China and Mongolia. This is a company it trades at a premium. It's at 13 times earnings next year on our estimates. But I think it earns that premium because they're focused toward growth over the next 5 to 10 years, which is primarily in Asia and not really in the U.S. markets. So I think Peabody is the one company, when you look at the major U.S. coal miners, that is very well positioned to capitalize on an eventual Asian recovery. And we're seeing plenty of signs of that right now.
And what kind of target do we have there for Peabody?
Peabody, our target's 41.
41. And that also for a 12-month time period, Paul?
That's right.
Okay. All right. I want to thank you very much, Paul Forward, sharing your insight and your knowledge about the coal industry. He's got a buy recommendation on Peabody as well as Massey Energy.